Welcome to Galaxy Brains, the weekly podcast from Galaxy Research, flying close to the sun. Supernova when we burst, I often drop flames and I flow a little devious. You're talking blockchains? Tell me how much is its TPS? Ha, silly metrics get rejected. You might know about your rights, but have you seen how strong my left is? Haters take the pain they have and outwardly project it. Hope your vision gets corrected, for that image is reflected back. Blast the track and build a citadel in Zion. Disciples are my scions, crumble pyramids like Mayans. We're talking shop with my homie Trey the Lion. Let's build the future we deserve and not just one to spy on. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. As I said, Trey Aslanian from Galaxy Digital Trading, Trey of the House of the Lion, is our guest. He's a repeat guest. He is back to talk about interesting stuff that's happened in crypto over the last month or two. We'll talk about WorldCoin and FriendTech and Base and who knows what else. We'll also check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk markets. Big crash happened last week in crypto markets, and we'll get into it. Before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. I love having Trey on the show. It's been a while since he's been here, so let's just dive right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, great to see you.
Thanks for having me. How you doing?
I'm good. How are you doing?
Yeah, hanging in there. It's the middle of August, you know.
That's what I was going to say. Like, we've had a little bit of excitement finally.
We did.
But overall, it feels like a long summer. There's been lots of doldrums. I'm not sure what a doldrum is, but but we had some volatility
Absolutely.
Last week, sort of right after we recorded last Thursday.
It was ironic because we were talking about how volatility was low, and I was saying that it seemed reasonably justified. Obviously, that was wrong. But what we saw happen last week was a deterioration of market conditions. In terms of like liquidity, forced stop outs in the middle of August, right? And so you had a pretty aggressive move lower down to 26K. And it happened at like in the afternoon, right? When like not many desks were on,
Yeah, it was like 4 to 6 p.m. or so on Thursday night. Yeah.
And there's, lots of forced liquidations into, no liquidity basically.
I think
that's why we had that big move.
Yeah, I think we saw the largest, in Bitcoin specifically, the largest Bitcoin liquidation event since FTX.
Yeah. Right. So this is on the magnitude of, FTX, Three Arrows.
Right.
So this was a very large liquidation event. Generally speaking, my approach to large liquidation events is they're normally good opportunities to fade the trend, right? Basically, all of the forced selling has had to happen, or most of it. Mm-hmm. And, most of the time, if you're on the other side of that trade, it tends to perform well, just because people are just so scared at that time. And so if you can, manage that anxiety, it's typically a good time to own assets, particularly alts. Alts tend to have the most exacerbated moves. And so, in the liquid alts in particular, you tend to get a very aggressive bounces when they happen, just from a percentage standpoint, because of things we've spoken about before, base effects
and lower liquidity.
Yeah, and
I love that he said manage the anxiety. Is that like a large part of a trader's job? Is that like the main part?
It's like 95% of it, or not 95.
Yeah, I know.
It's a large portion of it.
So. And then the move, people were asking why, right? And there were some weird headlines, but none of them really lined up. But to me, it felt just like we've had a deterioration of the broader investing landscape globally.
No, absolutely.
What context would you put this? We'll call it the Bitcoin crash that happened last week. But
I think broader markets were generally selling off pretty aggressively.
For a couple weeks even.
Couple weeks, like 2-3 weeks, right? It was Asian equities because of the Chinese deterioration, right? The bond market was selling off very aggressively, particularly in the back end, like everywhere. NASDAQ reacted, S&P reacted, like Euro stocks reacted, like Hang Seng.
Right.
Like there was a global risk-off move that occurred over the past couple of weeks, and we spoke about it last week, higher U.S. rates, so lower bond prices, lower equities, and a stronger dollar. These are all things symptomatic of a risk-off move.
Right.
and Bitcoin was holding up okay.
That's what I mean. It was
going
kind of
into
it was strange. It was kind of like one of the last dominoes to fall. Usually, crypto is one of the first. I feel like in a risk off. It held up for weeks at 29. It was just sitting there at 29.
No, I mean it just.
Eventually,
I think anecdotally, it seemed like you had a reasonable amount of positioning left in crypto, and you're not close to year end, et cetera. But if you're a crypto fund, like there's not really a compelling reason to be long aggressively at the moment.
Right.
And we spoke about it. It's really like Bitcoin is going to move on the ETF stuff once the ETF is actually like in the market and the flows can actually happen.
Right.
In terms of like how high Bitcoin can get to on just the hype of the ETF, we reached that pinnacle.
I think we did
already,
too.
which was 31.5.
Right.
And that's kind of your bar.
Yeah.
And in terms of like known buyers in the market right now, it's very few. Right. It's MicroStrategy that has that. The publicly announced
ongoing Bitcoin
purchase
program, yeah. Other retail aggregators, yeah.
And then Tether, right?
They're gonna,
there's a wallet that's being tracked.
They say they're like
that
quarterly buying or whatever.
Correct.
Yeah. Right, it's not that much. I agree. And the narrative catalysts are pretty dry here. We got like some court cases to pay attention to. The grayscale thing is so funny because like, everyone was like convinced that this, including should say I wasn't convinced, but I was also part of this analysis of following the grayscale ruling as very likely to come out in August. But now it's like so late in August that it's like maybe it isn't August, maybe it's months from now. It could be. And even then, like that's a weak catalyst, like a grayscale victory doesn't actually doesn't really mean that much in the scheme of things. Yeah, so you're looking at a narrative landscape that's pretty dry. I don't want to say bleak, but pretty dry of catalysts at the moment. I will say you start to approach the halving. We are starting to get into, I think in a couple months it'll be reasonable to start thinking about the halving's impact on Bitcoin prices and cycles. But even that, really, you shouldn't be. Historically speaking, 8 months out isn't like a major time to worry about. So yeah, it's doldrums. It's a little bit of doldrums.
It's doldrums, and I think when you're in a world where there aren't too many crypto specific catalysts, I do tend to think that crypto follows the broader market as a whole. And so my outlook for the broader market is very rates oriented.
Yeah.
And I still am of the view that your risks are that inflation is there's the risk of reinflation. Commodity prices might start to move higher. The U.S. consumer is still strong, and data's generally holding up okay. Like imagine the U.S. economy right now can handle mortgage rates that are like 7-8% just fine. We just had like new home sales print 4% higher month on month.
That's wild.
And beat expectations.
Who is buying these homes at those rates?
Well, I mean, I think a ton of people.
And I think it's a lot. We were talking about a lot of cash buys.
Cash buyers, absolutely. And it's just demographically, like a new family, right? They still need a home. They got to upgrade from an apartment. Well, fair enough.
I don't know.
Yeah.
But yes, I'm saying that you're right. That is a strong number. That 4% is a strong number.
It's super strong. And what you have to realize is that there's so many things that get impacted from a robust housing market, right? Like you buy a home, you need a plumber, electrician, construction, right?
Commodity,
like the state and locality that gets the taxes from the home, right? There's just such a multiplier effect to the housing industry, and it's still super strong. And the story is simple. Nobody, like the supply is tight because nobody wants to get out of their low mortgage.
Scarce asset.
Right? Yeah. And there's still buyers.
Right.
And people still have jobs.
So theoretically what? I mean, the basics are pretty simple until there are not buyers, right? Or people become forced sellers.
Or there's more supply.
Right. If they become forced sellers, or if the rest of the economy breaks down, people get laid off and stuff, they need to move to a cheaper home, then you see a supply influx and...
But I mean,
that's objectively not happening right now.
It's not.
So we still have that strength.
And so that's why I think the U.S. economy can handle higher interest rates. And this week we're actually going into Jackson Hole, which is happening. And the discussion is, part of the discussion at least is around neutral. Yeah. Like, what is the definition of like R-star neutral interest rates? Like, where is the baseline for the U.S. going forward?
Krugman finally came out and
I
just
don't believe in Krugman.
I don't either, but he came out and said the Fed should target 3% instead of 2%.
Which is actually very interesting, given that he's a little more left.
He's on the closer on the
more
MMT
dovish.
kind of side,
Correct.
more dovish.
Yeah.
That, for people joking, wow, it's a 1% increase. No, dude, that's a 50% increase in the target. Some people are pointing out.
Yeah.
But
that's a big deal.
That is a big deal. Not so much that Krugman specifically is saying it, although he is influential. He's a New York Times columnist. He's got a large audience. But that would be a big deal if they did change the target. But we've talked about this before. Do you think, let's say would they ever even say they've changed? They would never say that because they would immediately get more inflation, right? They can't admit it, even if they kind of do soft target 3.
Yeah, no, it's a very hard thing to change. Right. Especially given that decades of monetary policy have been based on an R-star around 2%.
Right.
And that's the construct of like academia, et cetera, right now is around, 2%. And it's not just the same for the US. We're talking Europe.
Pretty global.
Global.
That's basically the global consensus for
2%.
a decent amount of inflation. That's not too much, but is good enough to...
Not too hot, not too cold,
Right.
And so...
Just right.
Yeah, basically. So it makes things challenging for them. Like communication is such a tough thing for them because they have to worry about their credibility at the same time. But all in all, what I think it highlights is a level of uncertainty around inflation and rates that is really unprecedented. And that makes owning assets, particularly long duration assets that have exposure to this variability in inflation and policy, much tougher.
Yeah.
Right? Because if expectations for neutral are moving around, expectations for inflation moving around like this, it's just really tough to stomach, especially if you're in a 20-year bond, which is why my favorite trade still is curve steepener.
Yep. Beimnet Abebe from Galaxy Trading, my friend, thank you so much.
Pleasure.
Let's go to our friend and our guest, Trey Aslanian, Trey of the House of the Lion from Galaxy Digital Trading. Trey, great to have you back on Galaxy Brains.
Likewise, my man.
I was just laughing because I love your last name, right? We were just talking about this, and people don't realize, right? I say Trey of the House of the Lion, right? It's Armenian for House of the Lion.
It is.
It's Aslan from Lion and the Witch in the Wardrobe, right? The Narnia series is
my favorite.
King.
Yeah.
Aslan means Lion King.
Those movies came out when I was like young. We were all so pumped to go see them in the theaters.
And you got a big family too. You have what, five brothers and sisters?
We got a squad. My dad's one of 5, and they all have a bunch of kids.
So tons of Aslans out there.
There's like 20 first cousins roaming around the
You guys
New
do
York,
like family
Jersey
reunions in general and stuff occasionally, or?
Oh yeah, we party all the time together.
Big family.
Yeah.
Everyone of the House of the Lion.
And it's good because we're all like around the same age.
I love that. Yeah. That must be fun.
I wish other people are like trickling back into New York,
Oh,
like
it's great.
post college, like everyone went and did their own thing.
I love that. So now you got so it's the House of the Lion is large and reuniting perpetually.
Yes.
Trey, welcome back. I love having Trey on. I think for longtime listeners of the show, I think you've been on at least 2 other times, so you may know Trey from those. But if you don't know Trey, he's been working at Galaxy almost the entire time, pretty much, or almost close to Galaxy's entire history. Trey runs our OTC trading desk and is well known in OTC crypto trading. So a lot of our listeners will know Trey maybe from his work. But I love to talk with Trey about crypto mumbo jumbo because as a person who's been trading these markets and operating a desk that trades these markets for years, Trey follows the news flow like I do as a junkie. So it's been a while since we've chit-chatted.
Yeah, I don't look at my phone screen time, but I suspect it would cause me to
Trey's got a Twitter account that's like, he's got like 10 followers, but he follows like 5,000 people. You can clearly tell he's like a hardcore crypto Twitter lurker.
Oh yeah.
Before we even start, I had a funny, for a crypto trader, somebody asked you as a junior employee you had, I remember a couple years ago when I was here, they said, well, what are you going to do with your Bitcoin? What was your answer to them?
And give it to my kids.
Yeah. So I love this take because Trey loves Bitcoin also, which I think is frankly kind of rare, at least in the public discourse. I think most people that love crypto also own and love Bitcoin. I think most people are Bitcoiners, but for someone who really follows and trades crypto markets, like you have a very long-term bullish view on Bitcoin.
It is my Northern Star. It's like where I anchor everything to. It's the one thing that I know will work. I'm pretty sure the other stuff will work, and I'm very bullish on it for specific reasons.
Yeah.
But like Bitcoin will work.
You're very confident.
Yeah.
I am too. Love to hear that. But that being said, let's dive into some other, what I said, mumbo jumbo.
Yes, the mumbo jumbo.
The other parts of the crypto industry. One of the huge stories and things that's been happening in crypto and has captivated crypto Twitter is this new app, FriendTech. It's a social, I don't know what it is, a social monetization app? What
I look at it as more of like a token gated Discord, like Telegram vibe, where, you know, I see the example, like if you could have been Mr. Beast's first subscriber, right? That subscriber is more valuable than his millionth. And the kind of bonding curve that they use reflects that. And yeah, I mean, it kind of took the stigma away from paid groups in a sense, right? Like you would get ragged on that pretty often.
Yeah, like you run a paid trading group or whatever.
Exactly. You know, I don't know how much we want to get into this too much, but we're seeing a big takeoff in like the, you know, the social like media influencers from, you know, all across the internet that you can imagine.
Yeah, so FriendTech is what? It's an app. You link your Twitter account, and then people can buy and sell keys to your chat.
Exactly.
Essentially, and the price of the how does the pricing work? Because you're not issuing them. The protocol is issuing them.
It's like a quadratic bonding curve. So like when I buy a key to the Alex chat, Alex doesn't get that ETH. That ETH is like, think about it as like an AMM, right? So like that, if someone wanted to sell that share, they would sell it and get that ETH back.
It comes out of a pool or creates a pool for each user.
Exactly. Think about it, it's like I think it's quadratic or it's something. So basically like
some algorithm.
The difference between the second follower and the 200th or the 20th is the same, and then 200th, you know. So like as they get big, obviously like the next marginal.
And so the users, we'll talk about the account. Like if you're buying and selling my key, so me as the account, not the buyer and seller. Though you also have to have your own if you're going to participate. They also collect a portion of a trading fee. Right, so if you buy and sell my keys to my chat, then I think there's a tax that goes to the FriendTech team, and also a portion that gets delivered to the chat owner.
It's quite large. I think
it can be. I saw
it's 20%
total,
half to the team and half to
that is quite large
to the creator.
They had I saw some of the big Twitter accounts that are on there have collected 20, 30 ETH in fees so far.
Yeah.
Like
it's
Kobe
insane.
and like, you know, but like you said before, there's some non-crypto people starting to get interested.
That's going to be the key.
There's that guy from FaZe, which is what, the gaming team?
Yeah, I brought this up to my brothers, and I was like, oh, like a famous guy joined this like crypto app. Like, who is it? I'm like, this guy FaZe Banks, and they're like, dog, like, how do you not know who that is?
He's mega famous?
He's mega famous.
So it's like Ninja.
Yeah.
Back when Ninja, I don't know if he still is, but I used to enjoy watching Ninja play Fortnite. So it's an interesting. You think this is like people have tried this? There've been several past attempts at this with BitClout. Even like Steemit was social media that it wasn't really the same. It was more like a Reddit style thing. But
it feels like a Uniswap moment. And I know I'm like kind of gassing it up a little bit, but the idea of Uniswap wasn't new, right? Like Bancor did it. We had like Ether Delta back in the day. Like obviously BitClout was a giant scam.
Right.
But like their idea of like a bonding curve was like actually pretty good. Like that was the part that actually made sense to me. So it feels like these guys got so the UI is still a little bit buggy.
Yeah.
But that's the beauty of crypto, right? Like
you're trying it in production.
Their official app, like they already have alternative front ends for it.
I saw that.
FriendMex
or whatever. Yeah.
It's like a way better UI.
Well, because
it's
on chain, right? Like so you
APIs.
can build But the other thing that I think was really interesting that they've done, which I think we'll actually see more of, and who knows if Apple and the Google Store or whatever start to take.
I know, yeah. The Safari.
This is called a PWA app, a progressive web app.
Yeah.
So you go to the site on your phone, and then you press a little like share button or whatever, and you can add to home screen.
Yep.
But it's not just I didn't realize this, but those added to home screens, I thought they were just like you click it and it's like just a link to the website and it opens it in Safari. It doesn't. It opens it in its own little window type of thing, some kind of new web app that works really well on mobile, and it bypasses the app stores. So there's no approval from Apple because as you know, Apple has been hostile to some crypto use cases, right?
Yeah. I worry that I don't know. I worry that they might close it because if I'm Elon Musk and like I'm beefing with Apple over these like payments, I would just fucking make Twitter that.
Yeah, you could definitely get around. Yeah,
maybe
it
there's
seems like a loophole from these. Yeah, there are some
the
issues.
trade-off. Maybe it makes sense for smaller apps, but not bigger apps.
Yeah, I mean, it makes me think. I know Damus, the sort of main iOS Noster client, was removed from the App Store. They had to go back to test flight because you could tip people's posts over Lightning.
Yeah,
you call it zapping them.
Yeah.
And the App Store was claiming that was like buying an in-game item, which violates their store if they don't get their 30% cut. So they, and of course, people were like, "That's not buying an in-game item, dude. It's tipping. Yeah. It's not like they're not buying anything. Yeah. There's nothing being changing." But anyway, like maybe they and others could become these progressive web apps. That was one of probably the main reason this thing has taken off is it was a pretty solid mobile-first experience.
100%. And this is why I know like it's a little bit off topic, but the Solana guys got a lot of shit for this, but we really do need our own phone. Like. The Apple monopoly, like, and I respect the fuck out of Apple as a company. Like, they are like a generally, in terms of our options, privacy preserving. I agree. Out of the other major ones,
and the iOS is awesome. I mean, it's been great for years.
But monopolies are not good for consumers.
And this is a public. We're building in a open source based public world these tools, and to not be able to access them easily is very limiting, right? And it puts a real cap on adoption of public blockchains if like you can't really use them well on your phone.
Everything's mobile these days.
Yeah,
like,
I mean,
you're irrelevant if you're not on mobile.
I agree, but I agree that the app. I think we'll mention this, but not go deep on it. But there are regulatory pushbacks that have been happening to Apple and Google and these others in jurisdictions around the world.
Dude, in the UK, they're going to take away
I saw that.
The iMessage.
Yeah, because that was a little different but similar. It's because the UK was passing a new surveillance law that would basically require Apple to hack their users' messages. And rather than iMessage is encrypted, rather than decrypt it or build a backdoor, they were just going to shut off iMessage for the whole country. Which, by the way, I support Apple's stance on that. That's a little different than the tax on the App Store and the gatekeeping. But back in the day, you could jailbreak your iPhone.
Oh, that was so sweet.
It was great. Cydia was one of the alt app stores. But honestly, it's just for like a working regular person. It's just A, it's too hard. B, it's just not viable. You can't. Obviously, it bricks the warranty on the phone and other stuff like that. But like, you just can't actually like do that on an ongoing basis. You got to use the phone. You can't be required to like hack into your phone just to use it.
Well, and this is what scares me. It's like the free and open internet, the global internet is very much at risk, right? You see, I mean, obviously China, they have their wall. You have Canada and the UK, supposedly like
you have GDPR related stuff. Yeah. No, we're building. It's the everywhere. It's a great firewall of everywhere. I mean, everyone wants their own piece of it. Both parties in the U.S. have called for varieties of forms of censorship and crackdowns on big tech.
Yeah.
And I think personally, most people in the crypto sector believe this, that big tech does have too much power. That's partly why we're all trying to build stuff on an open internet. That's obviously a key part of the Web3 thesis, is sort of re-decentralizing the web. But yeah, the phones are a big barrier to that right now.
Yeah.
And I agree. I mean, look, I think the Solana saga is an interesting experiment for it. I mean, and all right, let's talk about, so we talked about FriendTech. Yeah. I mean, you think it's going to be big in general, this type of thing? If not this one, then another one?
It is. It's so easy to onboard, and right now, like celebrities, like take the free money.
Yeah, yeah. So
super low barrier to entry, because it's on the crypto
Isn't
rails.
It enough to pay just to have a private chat with people? Like,
dude,
it seems like, is that enough utility?
I mean, I think OnlyFans, they make almost, like, generally the creators make way more on the messages than subscriptions.
Than on the other stuff they post?
Yeah. Generally people, like, there are a lot of lonely people in this world.
I get it.
So this is lonely, plus, like, I mean, how many people are in, like, paid trading chats? Like, there's...
I liked what you said about Twitter also, that, like, shouldn't they, like, why should they have this value outside the protocol, the Twitter app? Like, they could... Yeah. And they are starting to, right? They're not doing the buying and selling the access to the accounts as tradable keys. They're doing the revenue sharing with the creators. I've started to see some big chunky
big
payments.
Numbers. Yeah.
So let's talk about FriendTech is a blockchain app. Technically, it's not on a blockchain. It's on a roll-up. It's on Base. the optimism-based rollup that Coinbase launched and operates. Is this the op stack winning? Is Arbitrum? Remember, Arbitrum was winning for a while in this optimistic rollup world. Like, this is getting a lot of play. Base. I saw Aave, I think, is going to launch on Base now too.
They launched yesterday. So
yeah.
what do you
think?
Arbitrum is still very much the king of DeFi on chain, right? They have like your GMXs, all that good stuff. They do consistently, like I think it's right behind BNB in terms of DEX volume.
Oh wow!
By chain, Optimism isn't close. Like
right.
and the traditional like crypto only stuff hasn't really, grown on Optimism, right? They have the synthetics as kind of like their main thing, but the social fi, the game fi, kind of like what you would have thought a couple years ago might have gotten built on like high throughput layer ones. That's what Base is winning on right now.
Interesting.
Right? So they have the FriendTech stuff. Like that's just new. That's not like sucking in liquidity from, wherever and playing zero-sum games. They also they had this hackathon that they did and something called like Base 64. It's like some prediction market thing. So like they're going after different segments, which I think is really interesting. And, Coinbase, I think had a very clear plan with this rollout.
Yeah.
And it wasn't just going to be a Uniswap fork, Aave fork, with, like your typical
classic, try to vampire attack because there's not much of a differentiating value prop there. But yes, if they have other types of apps, that can be interesting. FriendTech definitely one.
Yeah.
I saw the chart's been going around. I think we published the chart in our newsletter maybe last week or the week before. I think daily active, or maybe it was daily active users, some version of the user metric on Base had exceeded all other Optimist and Arbitrum. So it's growing. There's a lot of users.
They did more transactions than Mainnet the last couple of days.
It's wild. It's wild. So, and you think, what do you think about Coinbase launching its own L2? It's
pretty fucking awesome.
Is that interesting?
It's interesting because, this is again, like, this was the Cosmos vision.
Right.
This was the Cosmos vision, and it made a lot of sense to a lot of smart people.
Which is what, commoditized
app
layers,
chains.
app chain tech?
Yeah, app chains.
And launching one, but you don't need necessarily one for each app, but it's like multiple chains.
Exactly.
Multiple versions of the same chain.
Kind of coming to that
and
mainnet hub.
And this is the Ethereum is the mainnet hub.
Now Ethereum is the mainnet hub.
Not the Cosmos hub.
And that's it's like everything in crypto is execution. Like they had the right idea, and it always made sense to me, and I think that's why a lot of smart people liked Cosmos for so long.
Yeah.
But that's the beauty of being Ethereum. Like, if it's a good idea, you can just steal it.
Is WorldCoin's not on Base, but they're on their ops. It's an op stack, I think.
It's definitely op stack. I don't know if it's on like the main OP.
Yeah, I don't.
Or they have their own.
I don't remember if it is, but it's also it's on Optimism either.
Well, they have one-click deploy, like.
Right. That is, you're right. That's sort of the app chain vision here, is blockchains of blockchains that all roll up to the same place. Instead of individual blockchains, they're now these roll-ups that aggregate. And
Avo is another one. It's like the old ribbon. They're doing an options exchange on the OP stack.
So a lot of
they have token gating for NFTs while they're in beta. So like, you get this blockchain right out the oven, and you can tweak parameters as you see fit. It's awesome.
It really is that Cosmos vision, actually, which was always a smart thing. That's why a lot of the crypto world has always loved the Cosmos idea. It just never really worked. And it has worked, but it never got huge. And there's reasons for that. We won't delve into that. It's beyond the scope of our conversation. I mentioned WorldCoin. So we'll move on from Base and FriendTech, which is still interesting. But WorldCoin is kind of, I guess it's been a couple weeks, but they launched a month ago or so. Do you have any thoughts on WorldCoin in general, either on the idea or the whatever it is?
Yeah. First of all, like, having biometric data as your username is a really bad idea.
Yeah.
Because you can't change your username.
Right.
Or your password.
Well, if somebody acquires my eyeball scan, I can't change my. Right. You can't rotate your keys.
Yeah. I never want the easiest way for someone to get my money is to stick
something
a knife in my eyeball. That's what I want to avoid. Listen, people, but it's not like a laughable idea. A lot of smart people in crypto want to bring ID on chain.
Right.
I personally I don't see the point.
Yeah, I don't either. Now we got one of my teammates is writing a white paper on crypto and identity, so we'll have probably certainly a smarter opinion than mine on it at some point from Galaxy Research, but. I agree. It kind of seems like a solution without a problem. Like, everyone's been talking about it. There've been many attempts at digital ID, like, and you could, maybe in some places you really need it, but like, is anyone having, I'm just not sure I understand what the reason is. Why do I need a digital ID? We've talked about, Mike Novogratz has talked about one example a lot, which is you go to a bar to prove you're over 21. You're not supposed to have to give over all your other info.
Yeah.
Actually, they don't even need to know your age. It's really just a binary, like, is 21 or over or not. Okay, I can see that being a thing, but like, how many instances of like a bouncer like memorizing your home address and coming back and robbing you do we really have? Like, and like, you know what I mean?
Well, I agree in the sense that you shouldn't be like needlessly giving away extra information. That said, this is one of those things that feels like a perk. I don't think it's a product.
Yeah, it's interesting. Like, I think many people agree like that the Cambridge Analyticas and the other big data miners are perhaps misusing our personal info.
No.
Right? And so you would want more control over your personal identity. It's just not clear that any of these solutions give that. I mean, and WorldCoin isn't really that. It's right. They're using it for Sybil resistance. They're trying to make it very difficult to just like farm the token essentially.
Yeah.
And also to
they want it to be money, no?
Yeah, and they want it widely distributed. They want to try to, rather than giving it to the first couple people that find out about it, either Bitcoin miners who, the people on the Cypherpunk mailing list, like they got to mine it early, right? Yeah. Which I think is totally fair. Satoshi basically told anyone on Earth who could have possibly cared at the time.
It was effectively free.
Or the ICO, or the SAT, or the private investors in the SAT, right? Instead of those initial distribution methods, they said, what if we could figure out a way to put it in every individual unique person's hand on Earth? I think intellectually that's an interesting idea, right? From a distribution method.
I do. And that's kind of like why the FriendTech numbers are so popping, is because you do have to link a Twitter.
Right.
And so those are, I mean, for the most part, right? Like it's not it's not Tron transfers back and forth.
Right.
Where it's like,
I mean, you can create like fresh addresses and Twitter accounts, but they're not likely to be viable. Yeah. Or they're not likely to earn you a lot of like ETH on FriendTech, because it's the reputation of the account. If you have no reputations, you're not gonna there's no point in really sibling it. And you're right, there's that extra step to make it harder to sybil.
And also, like in terms of distribution, I think that's a bad argument, because like something like Bitcoin, like there were a lot of early adopters that sold, and that is like the markets, right? Like it's gravity. Like, okay,
everyone has
have this
price.
asset, now I want stuff. New people come in, okay, I don't want this. I don't want money. I don't want stuff. I want this asset.
Right.
And eventually, if enough people find it useful,
enough
people will own it.
Yeah.
Right. Like people find a way.
I agree, and I don't like the. I'm broadly going to just say I don't like WorldCoin. I think if you followed me on Twitter, you've seen that I've criticized it. But it's interesting, and it does go to that broader ID question, and I don't really know what the supposed use of ID on chain is. I agree. I think it's kind of like I talk about this sometimes, the Wall Street crisis in the 1960s. There was something called the paperwork crisis. So it was a huge boom in stock trading post-war. Yeah. But there was no net settlement. There was no central stock repository. So when you sold through your broker, let's say you sold 100 shares of Widget and somebody else bought 50 shares of Widget at a different brokerage firm. If I sold 100 if my firm sold my 100 to the other brokerage firm and their firm bought that 50 from my firm, you should only have to net settle 50.
Yeah.
But they had paper certificates, and they had to do, so there's no bilateral netting. So you'd literally have couriers currying around paper securities all around Wall Street. And they, of course, slip and fall in mud and like get destroyed or get left on some dude's desk. And it got so bad, it's called the paperwork crisis. NYSE would close every day at noon, every Wednesday at noon. There was no afternoon trading on Wednesdays, just to give the brokerages time to catch up all the paperwork. It got so bad, 25% of all brokerage firms went out of business in the 60s because of this, because of back office. That's why the DTCC was created, that central repository. My point is, if we had blockchain, we wanted to do it peer-to-peer. Yeah. But we didn't have the tech to make it viable. So what do? We centralized. That's what has been being done in markets for efficiencies forever. Yeah. Right? You get significant efficiencies out of centralization, but you create central points of failure and trusted third parties, which are security holes, as Nick Szabo says. So if only we'd had the tech. you certainly would have used it. The DTCC themselves in like 2015 wrote one of the seminal papers on blockchain saying we should be disintermediated by this awesome blockchain tech. They saw that and they were right. The problem is, switching costs and all this stuff. Yeah. So it hasn't happened. I kind of think of ideas. It's a long way of saying I think of ideas similar. If we'd had it when we started making our whole identity regime, I'm sure we would have used it.
Yeah.
But now it's like, we got DMVs and driver's licenses and stuff, and like you got bank. Is it a 10x? You said it's a perk.
Yeah.
Right. It's not a.
Exactly. It's not enough for the switching costs.
Yeah.
There's something about having your personal, information being physical also that comforts me.
That is kind of nice too. It comforts me. All right, let's talk about the balancer vulnerability that was disclosed yesterday. So today's Wednesday, August 23rd.
Yes.
Wednesday, August 23rd. We're recording this. So on Tuesday, balancer, which is DeFi protocol, DeFi app, I should say. Try to be precise with language. Protocols are layer 1s or layer 2s. Applications that are built on them are apps. So a DeFi app. First, tell me what it does. I forget if it's lending or whatever it is, but they disclosed a significant vulnerability.
Yeah, it's a more complicated Uniswap. So you can have 3 things in a pool, 4 things, 5 things, different weightings.
It's mostly
they have these things called boosted pools, where they, on an AMM you're providing liquidity from 0 to infinity. And so they say, okay, we're only probably going to need this like 20% range, and we're going to lend the rest out to Aave or lend the rest out to whomever. And then, all these things are atomic, so you can get it back in the same block if someone wants to trade.
Yep.
So I believe it was a lot in the boosted pools, but I haven't read the entire story.
Yeah, so there was something, some vulnerability, and they, my team looked into this. They said 4% of the total TVL, not a huge amount, on Balancer V2 was at risk, and but they were praised for because this actually was uncovered earlier, and was it patched also, or they're about to patch it? But the
pools are, I believe, immutable. So I think they're just
advising people to pull out of those pools and make new ones or whatever. But they were praised on Twitter for having a really responsible disclosure, really good comms around this. They apparently they disclosed enough to help people be safe and recover their stuff.
Not replicate the attack.
Not so much that it was easily replicatable. Timely, they dropped a list of all the affected pools right away and stuff. So anyway, but it brings me my question, which is like this year in particular, although in the totality, ever since YAMS, there have been smart contract vulnerabilities and sometimes maliciously, utilized by hackers.
Yeah.
But this continues to happen, and even this balancer vulnerability apparently was 2 years old. Like it wasn't recent; it was maybe recently discovered.
Yeah.
It just seems like it just keeps happening over and over again. Can DeFi work? Is this like
it can definitely work. I will say, the more complicated you get, the higher the attack surface, right? And like any time you're working with another protocol too, then you're inheriting all of their security risk. So I think something like Uniswap, for example, that's something where I don't want to jinx anything, but like it's very simple. Like it has had a lot of eyes on it.
Yeah.
You feel like comfortable with that risk because it's simple, right? And I think you can use more primitives on Uniswap, right? Like, you can use some of the V3 stuff for like replicating options payouts. Like I think that's going to be huge. Like you can take that building block that's so
simple thing
and then you can extrapolate out
rather than building it all into the app directly.
Exactly.
Yeah. So what I'm hearing is that, to my question, it can work.
It
works best if it's simpler.
Yeah.
The other thing I've been thinking about with DeFi is, because I love the concept, right? I want to do really as much as possible in my life in a self-sovereign way, if I can. Like I said, they wanted to trade the stocks directly. They didn't want to have to build the intermediary, but they needed it, right? If we don't need it, like the intermediaries, I'd like that.
Yeah.
To the extent that's possible.
Yeah. No, I mean, another simple, like, outside of Uniswap is like all the lending stuff. Like,
Compound's been around forever.
Compound's been awesome. Aave's been awesome. MakerDAO's been awesome. And that's one of the products that like really works, right? The over-the-counter credit market has been pretty decimated post the events of 22.
Yeah.
That's like being used not just for yield farm, like the incentives are dried up, and like they still have billions and billions of dollars of
There's
TVL,
real utility there.
while treasury bills are yielding
right
2, 3, 4, 5x.
It's a fair point, right?
It has product market fit.
Right. The incentives, the new token, primarily new token issuance in 21, was driving tons of TVL, and coupled with the low TradFi rates, which were 0.
Yeah.
And so that's why that made sense. A lot of money found its way into DeFi to earn those yields you couldn't get elsewhere.
Yeah.
But your point is those yields, I mean, money market's paying 5%.
Yeah.
So why would you so they're not putting their capital there to earn yield. They don't need to go to DeFi for yield. And to your point, there really isn't much.
Yeah. Just over collateralized loan. If you're,
that's
if
a
you're
use
a
case.
market maker and you can't get uncollateralized borrows anymore,
right,
or even collateralized for that matter, just because inventory is so spread out, you go to DeFi.
Interesting. And so this is the other thing I was going to raise is like, love it, love the concept, but and while I used to criticize DeFi a bit in 21, I said it was deep-pocketed whales rehypothecating to each other.
Yeah,
there was a lot of that. It's not really the case now. You've pointed out it's got utility. It really is being, to the extent it is being used, and obviously the total volume activity is down a lot, but again, absent incentives from where it went from its peak.
Yeah.
And a lot of those numbers were juiced at the time. But like the guy from Curve, right? The Curve founder who had all this Curve tokens, like, and he's borrowing off of them to pay for his life. It makes sense. He don't want to sell. He's long Curve. He don't want to sell them. So he's using DeFi to borrow stables, aka dollars. Wouldn't he have gone though to like, Fidelity Investments to borrow off his Curve if he could have?
Yeah, they're
so it's
good and bad. It's the accessibility of it which makes it super awesome and anyone can use.
Right.
The tough part, and this is all of crypto, this isn't just DeFi.
Yeah.
Is if you breach your margin level, there's no like a phone call and like give me my money by 9 a.m. tomorrow. It's like you're out.
Weren't they saying unless you're on the BNB chain, right?
If you get the protocol to whitelist your liquidation.
Yeah, no, I hear you. I guess my point though is that it's not really competing with TradFi like that. I think a lot of people think the end goal of DeFi is. It's just there are enough people with crypto native wealth and they want to access financial services with it, and that's the only game in town.
Yes.
Right. And so it's not. It really is. It's secular. It's insular. It's not. I guess there is real world assets moving, like trickling their way into it. Mm-hmm. But no one is like really saying. I guess maybe one of the main counterpoints here would be like Uniswap versus Coinbase. There are people who prefer to trade in DeFi rather than use CeFi. But I feel like it's mostly just financial services for token holders.
Totally agree. Well, people in the real world want to speculate on the biggest companies in the world, right? Like, you look at what MakerDAO is doing with their treasury, their real world asset stuff.
Yeah.
Like, that's finding a way on chain because people want it on chain.
Right.
To your point with the central repository, like, I would love for companies just issue their stock directly on Ethereum and we can all punt it around like we see fit. But yeah, and to be frank with you, I'm not sure if we ever get there.
Right. Me neither. I'm not sure.
It would be cool to, take out a loan against my.
Yeah, and not have to, call up the brokerage firm's securities lending desk and do it'd be cool to do it directly, right?
Exactly.
If you could, or against a pool or in a peer-to-peer way. Okay, so let's keep going. A lot of the conversation we've had so far really focuses all around the Ethereum ecosystem, right?
Yeah.
And so I think if you take out, big, like Ethereum dominance, again, outside Bitcoin, but against in the smart contract blockchain world, which is basically everything but Bitcoin, is inexorably rising, right? And we wrote a report called Ready Layer 1 in December 2021 called Ready Layer 1, Ethereum and its smart contract competitors. And the thesis of that report was basically Bitcoin's its own different thing. It's not in competition with ETH. It's like they have different goals. So we'll set it aside.
Yeah.
But inside this other major part with the global computer type blockchains, it's really Ethereum's game to lose against these alt L1s. And doesn't it seem like we were right? Like the alt L1 thesis seems pretty dead, no?
We were right. I mean, we mentioned the Cosmos thing earlier. I think Solana does some really cool things around their fee markets. And with 4844, like we're going to have a localized fee market for
Ethereum
rollups.
Yeah.
Which, by the way, I don't think it's going to take cost down that much because if you have 10x the activity on the layer 2s, and we have a new layer 2 spinning up every day, it's going to be net neutral. But anyway,
yeah,
it's,
fair.
it's conceptually, it makes a ton of sense.
It's moving Ethereum more in a roll-up focused way.
Yeah, it's localized fee markets, right? And Solana did that early on. I thought that was a really good engineering decision, and the Ethereum guys borrowed it, and
yeah, I think
that's all they need to do.
I think when it comes
see what
to
works and use it.
Yeah, but it does seem like L2 season on ETH. We've actually seen some alt L1s. I think CeeLo was one that has said this. They're actually planning to close their L1 or transition to an L2 on ETH.
Yeah.
Like it's
a great business.
Has ETH
profit margins are
won that
outrageous.
game? I mean, is the alt L1? I mean, I joked in the intro rap for this episode. I said, "Oh, we're talking blockchains. Tell me how big is its TPS?" Right? Which was always the joke. You said not the joke. It was the value proposition for like every alt L1 that's launched since 2017 was, oh yeah, but like we got like 10,000 transactions per second. Like Bitcoin has 7, like ETH has 13 or whatever, right? And like that hasn't slowed Bitcoin's adoption, and it hasn't slowed ETH's, but it did result in the launch of tens or hundreds of supposedly high performance blockchains. And not to dunk specifically, but even Sui and Aptos have launched basically under that same thesis. But if you have performant L2s, like, do you need entire other blockchains? It seems like the answer is more no than it's ever been.
Okay, I'll totally agree with that phrasing. There are things conceptually that make sense that maybe you might need like a high performant L1 for, like decentralized physical infrastructure. The issue is, if that doesn't actually happen soon,
right?
Then Ethereum will scale to the point where they will include that as well.
I see. Yeah.
Just like what happened with Cosmos.
Right.
That will happen to that opportunity with the high
whatever that latent.
The layer 2s aren't there yet.
Yeah, they're not.
They will be. They will be. So it's almost it's not quite game over, but I think
it's trending positive for Ethereum sort of gobbling those use cases. I will say, just as on Solana in particular, this is one of the few alt L1s I kind of like, and it's because it's meaningfully differentiated from a technology standpoint.
Exactly.
It's not an EVM clone, right? They've made very interesting different decisions. But what's the number one use case on Solana, dude? It's NFTs. It's not high speed. Even though it's built to handle high speed stuff, that those use cases haven't materialized at scale, which is again why I joke about TPS. Like, hasn't really mattered, hasn't really been the differentiator. Supposedly, I'm told by some alt L1 investors that there are these latent use cases that, but for having a high TPS blockchain, haven't been able to be explored by devs on blockchains yet. I'll believe it when I see it, but it does seem like that Ethereum dominance and 4844 is going to further solidify its commitment to the roll-up regime, is sort of taking hold. And okay, so is there any other L2 stuff that's interesting that we haven't talked about that you're interested in?
Some of the ZK stuff is coming along a lot faster.
I am not at all smart enough to understand where this is, but I
do.
I know.
Tell me this coming along well.
Well, that's what I'm saying. I see like competing narratives about ZK EVMs or ZK rollups with EVM compatibility. I can't even say that. We have a report. Christine Kim, I think, wrote a report on ZK EVMs. Chuck on my team has written about it a lot too. Compatibility versus equivalency, whatever. There's actual don't listen to my uses of these terms because I don't know this. They mean specific things. I just mean Ethereum like ZK rollups is sort of the gold mine, but I literally see like major competing views on how close we are to these things actually launching and functioning.
Yes.
So I just don't know.
So I mean, there are a few like ones live in production. Obviously, like you need to decentralize the prover. That's like the big. That's the big one, and you need to make the prover not need like a data center.
Right.
You like
it has to be like feasible.
Yeah. So I think, at least from my understanding, the stuff with the provers have been going well, and we're making progress there. And to me, once that happens, then you kind of have permission to go experiment like crazy.
Right.
Throw some stuff on mainnet and
it's
work out the
interesting.
kinks.
Yeah. Do you think is that in your mind? I mean, so I guess just to set the tone here, we'll do an episode on ZK. It's important that we do, I think, but zero knowledge. It's private by default is the concept, and thus private also. It's also higher throughput because it aggregates, and the idea is these would be more efficient and more private.
Yeah.
And so it's seen as sort of the holy grail of L2 scaling in general, right? Is that how you view it? Is that?
Well, it's tough when like you can't see it.
Yeah.
I will say a huge concern for putting the world on chain is financial privacy. Like you don't want trade secrets leaking to competitors,
Right,
and stuff like that.
Right.
So that's always been an issue with Ethereum, especially like their account space versus UTXO is a huge.
It's also worse, yeah.
So I mean, if they can figure that out, like
seems huge.
It's a really big deal.
Do you think, let's say, a really powerful ZK EVM that is incredibly decentralized, et cetera, like the real goal launches, but you have these other L2s, you have the op stack or the OP stack, you have Arbitrums, they're working, they have adoption already. Does usage and liquidity flow away from those into the new ZK EVM, or do they just like upgrade to like switch from optimistic rollups to ZK rollups? Like what? How do you think
Honestly,
that would play out? Because it seems a little bit like the innovator's dilemma here. It's like at that point, most likely, because it'll be a little while, probably still maybe even years before these ZKs are ready. The optimistic rollups, they're going to have been working. They're in market. They're the incumbent, right? Like, do you think that
with all these optimistic rollups coming up, like you kind of break composability,
right?
So, and you lose a little bit of auditability. Like I like knowing what the Aave collateral is versus their liabilities. And
so what, you lose it because you have to go to all these places now to figure it out? You got to add it all together?
No, I'm saying with the versus like the ZK, right? Like, I mean, you could do some proofs, I guess, but
the app would have to like do the proofs to show you, right? Like they'd have to reveal information,
and you lose a little bit of sovereignty that you get with like the application specific rollups. So I think those will stick around. They have a purpose for existing. I think you could have a lot of DeFi move over to the ZK stuff just because you want composability between these rollups and obviously the scaling benefits and transaction fees. So I think it's additive, if anything. But it's tough, right? Like, you never know until it launches, and I think how it starts is really important, right? Like the fact that optimistic rollups are out right now and have billions of dollars TVL, those things tend to be quite sticky.
Yeah. All right, let's move on. One we talked about your interest in Bitcoin at the top of the show. Some interesting stuff happening in Bitcoin. There's obviously ordinals. Have you been following ordinals in general? The variety of What do you think about Bitcoin adding either NFTs or even tokens? You see the BRC20 tokens. Is that good in your mind, or how do you think about that?
So, anytime you take like things off chain and try to put them on chain, that introduces like minor extractable value, and that scares me a little bit because I think the Ethereum people spend a lot of time on that, and personally, I think it's like fundamentally unsolvable.
Yeah.
And so that concerns me a little bit, and it could detract from the use case.
Bitcoiners aren't ready to deal with it, or they don't know how to deal with it.
Well, I just don't.
Or
think
it just hurts Bitcoin.
It just hurts Bitcoin, right? Like you want it to be money, and anytime like, okay, I want to like inscribe data, right? Like maybe there's some MEV there, but like probably not, right? You're matching everything atomically.
Right.
And it's more fee for miners, which is great. But yeah, like I don't,
It's not why you're into Bitcoin.
It's not why I'm into Bitcoin.
Yeah. So, and you can do that on other things. Yeah. I mean, I think I agree. It certainly shouldn't be the dominant use case for Bitcoin.
Yeah.
I don't think it's that big of a use case. Like when we look objectively, there are plenty of Bitcoin block space is being used for that. But in terms of like the number of like Bitcoin supply that's like associated with this is very low.
Yeah.
What about like if we did it elsewhere? What if we had like a ZK rollup on Bitcoin, for example, or more expressive L2s? Like there's a lot of talk about drive chains, which are sort of like merge mine side chains. Does that interest you, or is this something better left to just do on other chains?
Yeah, I mean, it's always, people using Bitcoin is always good. I don't know, both culturally and from like a tech muscle perspective, if Bitcoin can still compete
right
in that game.
I think it really technically, I mentioned that Ready Layer 1 paper, Bitcoin doing this type of stuff actually flies directly in the face of our expressed Bitcoin thesis. And mine personally, which is that it doesn't compete with Ethereum. It shouldn't.
Yeah.
Ethereum, contrary to what the ultrasound money boys think, does not compete with Bitcoin on the verifiable scarcity of supply.
Yeah. And not only that,
and they shouldn't. Neither should. They should. It's almost like stay in your lane. That's one view.
Yeah.
And I kind of have that view. On the other hand, like you said, I think anyone paying for block space is great.
Yeah, sure.
So
100%. I mean, like,
it is kind of a narrative breaker, though, if Bitcoin starts to become a platform.
What's that? It's in Silicon Valley. It's like, did I hear revenue? Like, no revenue. It's like if you don't have something, then you're not going to be compared to that other thing. But if you have something and it's shitty, it's
now
bad luck.
And you kind of look bad. Yeah.
But like even like the work they're doing with like account abstraction on Ethereum, like Avocado Wallet, which is like a product by Instadap, you can pay gas in any chain in USDC. I would love for them to add like a Bitcoin option, so you can pay for every, like however you want to do it. Like I think you can get. And I know this is a bit hypocritical. You're kind of scaling Bitcoin custodially.
Yeah.
But,
I get it. No, I get it. I mean, the other thing is like, I really am of two minds, which I guess technically makes me ambivalent on this overall question for Bitcoin. Because like I expressed the one obvious side of the thesis, which is like, dude, do the thing you're good at, right? And don't bog yourself down with all this other stuff. You're probably not going to compete on like smart contract type use cases with Ethereum. Don't bother, right? You can't lose if you don't play, right? And instead stick to what you're good at. And that's been very good for Bitcoin. It's why it's one of the things I love about Bitcoin. One of the main things. On the other hand, I love Bitcoin. I love its blockchain. I think in many ways it's the most credibly neutral blockchain. And gosh, I'd rather have any other crypto stuff I want to do be on Bitcoin because I think it's the highest fidelity chain to do it on.
Yeah.
So I'm like, I'm not really sure. It's like which way, Western man, right?
I lean more ossification.
I think in this world, I think when it comes to those two competing visions, I probably do also.
Yeah.
I'd rather not mess up a good thing than shoot for adding tons more functionality.
Yeah.
But I don't actually want actual ossification. I think there's just other upgrades.
No, for sure. And we do need upgrades, but like there's a lot of really smart Bitcoin developers like in the trenches, like working on super like niche things to like, okay, like how do I download Bitcoin Core privately? And
privately like, better, like, real sort of deep tech.
Exactly. And that you always need to maintain that. You always need to be thinking about that. And I don't mean to like trivialize that. But like if I was dictator of Bitcoin, that's where I would put the resources.
Right, on sort of the deep tech, making it function better, more securely, more privately, faster, instead of adding new user functionality. Yeah. I think I fall in that thing too, but I am a little ambivalent, I think, in the scheme. I think the only Bitcoin upgrade that I'm on the record really calling for is OpCTV, which I think now, despite, some pushback that Jeremy Rubin got last year when he advocated publicly strongly for it, which is his, I think now most people are coming around to see that that's the simplest and safest covenants-related upgrade to do. So I would love to see that, but pretty like ambivalent on, or just have not formed a strong opinion, I think, for the reasons we've discussed on most of the other stuff, and even including drive chains. Which is probably the most controversial, widely talked about upgrade right now is drive chains. But,
so in what I don't understand though about the pro drive chain people are that there's not going to be any MEV.
Yeah.
Which is impossible. I don't even understand. That's like
there will be MEV.
Of course.
The question I think they're worried about is whether miners have incentive to do.
You know what's going on with stacks, right?
A lot of MEV?
Dude, so like
I don't know.
So basically you pledge your Bitcoin and you validate the stack block, and there's this one miner who just understands this game and just doesn't include that transaction, includes their own transaction, and gets all the stacks rewards.
Literally takes the stacks transactions that are going to be submitted, but just basically replaces the Coinbase address with their own, so they earn all the stacks from it. Clever. Simple. That's like very simple MEV.
Yeah.
Oh, man, that's great. It's like a man-in-the-middle attack. Yeah, that type of weird stuff would absolutely happen, And to be honest, like I think in some ways it's a side chain in which the miners hold the keys, quote unquote, a drive chain. Is that better than like a federated sidechain of any type? I mean,
Probably
I
not.
guess the peg in and peg out is more decentralized and permissionless than like a hosted sidechain like Liquid's peg in peg out.
Yes and no, right? Because like you don't need enough people like the Bitco model. Right?
Yeah.
You don't need everyone to be able to mint and redeem. You just need enough people.
Yeah.
And then there's a market price for it.
Right. Well, interesting stuff has happened, man. Trey, this is a great conversation. Thank you so much for coming. And, we'll do it again, dude. Trey Aslanian, Trey of the House of the Lion from Galaxy Trading, my friend. Thanks so much for coming on Galaxy Brains.
Thanks, brother. Appreciate it.
That's it for this week's episode of Galaxy Brains. Thanks to our guests Trey Aslanian and Beimnet Abebe, both from Galaxy Trading, as always. Hope everyone has a safe and happy weekend, and we will catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.